the end of China's rise and the future of world order. For over 4 decades, the rise of China has been the greatest economic transformation in modern history. What happened in China between the late 1970s and the 2020s was nothing short of astonishing. A nation that spent centuries in poverty, isolation, and political turbulence suddenly became an economic superpower, a manufacturing fortress, and a geopolitical challenger to the United States. No other country industrialized at such speed, scale, and intensity. The country went from bicycles and rice paddies to bullet trains, megacities, and global influence in less than one lifetime. But today, the conversation is changing. Analysts, investors, governments, militaries, and multinational companies are no longer asking, how high will China rise? They're asking a very different question. Is China's rise already over? This video explores the structural, economic, demographic, and geopolitical trends that suggest China may have reached the peak of its growth arc, and what that means for global power, international trade, technology, and the future world order. Buckle up, because the story is bigger than China itself. This is about the future of everything connected to it. How China rose, the greatest economic lift in history. To understand the decline or slowdown, we need to understand the rise. The story begins in 1978, when Deng Xiaoping reopened China to the world. He introduced market reforms, allowed foreign companies to invest, lifted price controls, encouraged exports, and built special economic zones like Shenzhen, which transformed from a fishing village into a megacity of more than 12 million people. China offered something the global economy desperately wanted: labor at massive scale. Cheap, disciplined, organized, and available by the hundreds of millions. Western corporations saw profit margins. China saw national development and modernization. The partnership worked for a while. By the 2000s and early 2010s, China became the world's factory. Global supply chains centralized around Chinese production. Container ports expanded into superports. Infrastructure spending surpassed that of the US and Europe combined. Millions exited poverty and entered a rising middle class. This period created the illusion, or the expectation, that the rise would continue forever. But economic miracles rarely last forever. They evolve, slow, and mature. China now faces the limits of its own model. The slowdown begins. The data doesn't lie. For decades, China reported double-digit GDP growth. But around the mid-2010s, that trend began to bend downward. Some slowdown was natural. Growth always moderates as economies mature. But China's slowdown wasn't just natural, it was structural. The key signals: growth falling from 10% plus to the low single digits, falling productivity in manufacturing and heavy industry, rising capital output ratio, more money required to produce less growth. Youth unemployment rising as education no longer matched job supply. Declining foreign investment over political and supply chain concerns. The economic story became harder to ignore. China wasn't crashing, but it wasn't rising at the same speed either. The gears were grinding, the engine was losing momentum, demographic time bomb, more retirees, fewer workers. China's population is shrinking for the first time in generations. Decades of the one-child policy, once seen as a stabilizing force, created an age structure crisis. There are fewer young workers and more elderly citizens than at any point in the nation's modern history. A society needs a constant flow of young labor to grow economically. China's labor cost advantage is evaporating. Key demographic realities: the workforce is shrinking faster than the economy can adapt. Pension systems face long-term insolvency risks. Healthcare demands are rising faster than funding capacity. Fertility is at historic lows as young couples reject traditional expectations. Marriage rates are collapsing in urban centers. Demographics aren't just numbers. They determine the speed and direction of the future. China's demographic pyramid is inverting, and inverted pyramids don't build superpowers. The property bubble and ghost cities, debt without growth. One of the foundations of China's apparent prosperity was real estate, entire cities financed by leverage. Apartments functioned not as homes, but savings accounts. Buying property became cultural, social, and national economic identity. But when housing prices fall, or demand evaporates, the model collapses. Today, China faces empty cities with no residents, developers defaulting on debt, construction sector contraction, banks overloaded with bad loans, falling land sales, cutting government revenue. This is what economists call a balance sheet recession. The problem is not lack of credit. It is too much credit that no longer creates growth. China is pumping the brakes not because it wants to, but because it has to. Global pushback and geopolitical limits. For years, China's rise seemed unstoppable because the world embraced dependence. Nations relied on Chinese factories, Chinese minerals, Chinese ports, and Chinese financing. But rising geopolitical tension changed the rules. We now see the shift to nearshoring, bringing production closer to home. Friendshoring, moving supply chains to allied countries. Strategic trade controls on critical technologies. Semiconductor export bans. Military coalitions forming to block expansion in contested regions. China is not isolated, but it is less welcome than before. Governments have learned a painful lesson. Dependence equals vulnerability. The future, 3 possible paths. No one can claim to know the future, but we can outline 3 likely scenarios. Scenario A: stagnation and consolidation. China remains powerful, but settles into slow growth. It preserves influence in Asia, but loses ambition for global dominance. Internal stability becomes the top priority. Scenario B: technological breakthrough. China invests heavily in AI, robotics, and domestic chip production, rebuilding growth on innovation instead of labor and exports. This requires risk-taking, intellectual freedom, and global partnerships that are currently politically constrained. Scenario C: confrontation and resource competition. China and the US enter prolonged economic conflict, with each nation building parallel financial, technological, and supply chain systems. The world splits into 2 spheres of influence, not Cold War, but dual globalization. What comes next for the world? The end of China's rise doesn't mean collapse. It means transformation, and the world will transform with it. Global supply chains will decentralize. Economic power will redistribute. Nations like India, Vietnam, Indonesia, Mexico, and the Philippines will grow. Western economies may reshore industries once believed lost forever. Power will not be singular. It will be negotiated. There will be no single world superpower. There will be blocks, alliances, clusters, and partnerships. A multiplex world instead of a unipolar or bipolar one. Conclusion: the end of China's rise is not the end of China. It is the end of the assumption that the future belonged to one nation. History is moving again. The world order is rebooting. And the next chapter is not about one country dominating the world, but many countries redefining it. This is the story of the next century, and we are living the opening lines. If you like this content, please like and subscribe. Stay aware, stay awake. This is Felix. See you next time.